Now we're looking at a daily chart, British pound, and I only really like to trade this average true range indicator on the daily chart. Sorry, on the British pound because of its volatility and because of its sensitivity to certain levels. And if we look at this specific candle right here, this is today's move. Actually, let's move it back one day. As of this day, you see this indicator down at the bottom here. This is our average true range based on the last 5 days. And this is the pip scale over here. And if we want to know exactly where our average true range is for the last 5 days, I would pull up this indicator, this value window here. And what I would do is I would go over to this candlestick and I would click on it, and the value will change accordingly. So the average true range on over the last 5 days is 143 pips. Now, 143 pips plus 25% is 178 pips, or 180 pips rounded, and 143 pips plus 50% is 215 pips. So it should go at least 180 pips to be at maximum true range for the day, or the day's maximum range. So anywhere between average true range plus 25 to 50%, then the currency really starts to get stretched. And when it starts to get stretched, then we look for price to hit significant levels. So for example, you see here how the market, this candlestick has a range from a low of 86.08 to 88.57, so almost 250 pips on the move. And as price is rallying, we look for the next key level, and we look for a bounce to skim some pips off of. And it's a high risk trade, but let me show you how that would work. We start the day down here at 86.08, as we saw on the daily candle. Now there's an economic report that blasts through from 86.80 to 8600. Price continues to move up. Then what we do is this, is as we see price moving up, then we look for our last key level of resistance, which is this day's high right here, which is different from this day's high. This is the next key level. Now we will mark it, and we can place a limit order, or you can even trade a market order at this high, or if you want, you can wait to see if price decides to go to this high, which there's a greater chance that you'll miss the trade because the range is already stretched in this case. So we watch price with a limit order up here, and here we bounce right on the previous day's high, and we start to retrace. It even comes back and tests it. If you place your trade right on the day's high, as you'll see that in some of the live trade scenarios, that's what I do, or maybe a couple of pips below. Here the high is 57, and now we look for some retracement to get some pips as it just bounces off this level, because it could, I've seen this thing bounce like and end up completely reversing many times. But we might just get a bounce, and because it's the British pound, we might get a bounce of 30, 40, 50, 60 pips. And let's just look to see how much it did bounce. From the high of 57, if you look here at the lows, we moved to a low of 88.13, so we've got about 45 pips bounce, so you have about 45 pips to get something out of. You would want to take profit fairly quickly here, 20 to 30 pips, and then leave some in just in case it decides to really run, as I've seen it do many times before. So again, here we see maximum range plus 25 to 50%. The closer to 50%, the better. A nice bounce at a sensitive level. And a sensitive level could be anything. This could be a Fibonacci. It can be a significant daily high. It can be the figure, and so on. So any significant level, the higher price moves, the more sensitive it becomes to key levels because the market is looking at them. And if the market is looking at them, then you may as well too. And trade it like the big traders are trading it.